real estate market in Seattle in 2025 has been very wonky, to say the very least. And today it's July 1st, so we're entering the second half of the year. So I thought I'd do a little recap today of what's been going on in the real estate market in Seattle for the first 6 months, and then tell you a little bit about what I think is going to happen in the second 6 months. So stay tuned for those predictions at the end. I'm curious to know, what do you think is going to happen in the second 6 months of this real estate market? Put your guesses in the comments below. Let's start with mortgage rates. So mortgage rates have really been all over the board. Today, at the beginning of the second half of the year, they're at 6.67 for a 30-year fixed rate. Now that is almost the lowest we've seen it this year. Basically, it is pretty much the lowest since the beginning of the year. We started off coming in from December into January. We started with rates at 7.16 on January 6th. Those came down a little bit into beginning of March or mid-March. 6.75 is about the lowest they were until they went back up to 6.9. And then now today they've come down to 6.67. Now this is about the lowest we've seen this year. And if you listen to any of my market updates, you know that the interest rate is a big factor for buyers, because when they have a lower interest rate, they can afford more in their monthly payment. And so that interest rate has played a big role in buyers' buying power, basically the amount that they can afford. And so I will say that when we saw this go from March 3rd, it had come down to 6.75. But then if you remember, later in March, the tariffs were announced and things started to get uncertain in the economy. The stock market went down quite a lot. And in places like Seattle, that really has an impact, because we have a ton of tech workers who are paid with stock. They have a lot of money invested in the stock market. And so that essentially could wipe out someone's down payment in a matter of minutes. So that is really important. Now, the other thing about what's happened in Seattle is that we've started to see some of this pent up inventory. And by that, I mean pent up homes that have not been listed because sellers have been waiting to list, now finally go onto the market. So we finally see some of these sellers who have been waiting. Maybe they had a great interest rate below 4%, or maybe that it wasn't the right time to move. Now they are taking that step to list their home for sale and get it onto the market. And with that, at the same time, we're seeing fewer buyers. And so if you've seen any of the national headlines, as we ended March and went into April, May, June, we saw that buyer demand went down essentially, and the number of homes listed continued to grow, which basically put our supply and demand out of whack. And so now homes are sitting on the market longer than they've sat on the market before. Prior to this, I've never seen, in my 9 years as a realtor, which isn't even that long because it's not even one real estate cycle, I have never seen homeowners who own a single family home or a townhome, for example, not be able to sell for what they paid for it a few years back. But we are seeing that now in this market. With COVID, it was so hot that everybody wanted a house. Everybody was buying at that time. There were really low interest rates. And so now those homes are going back on the market to be sold in some cases, and they're not getting the same price that they got during COVID when there was such high demand. Sellers are in a little bit of a tough spot right now because the prices have not appreciated exponentially like they used to during COVID. And so that leaves them needing a little bit more flexibility in their price, and sometimes the ability to not be able to resell for what they originally purchased it for. It's really important to make sure you're aware of that, especially if you're buying a home. You want to look at that home as an investment for about 5 to 10 years. That's what I tell all of our clients who are looking. You need to be able to hang on to that home for 5 to 10 years, ideally, so that you can get that home sold for as much as you bought it for. Now, in addition to mortgage rates, there's a lot of data out there about what is going on in the real estate market. For this video today, what I'm going to specifically focus on is just Seattle, so that this is data specifically from Seattle. I'm not going to filter the data any more than that. So this will be residential and condo all together. It's going to be all types. And I'm going to talk to you first about the average sales price. The average sales price in 2025, we started a little bit lower lower than it has been, and that's normal for seasonality. So we started the average sales price at $917,000 in the Seattle region. Just to give you an idea, the highest it's been over the past 3 years was back in 2022. It was at $1,034,000, and that was May of 2022. But as we continue to progress through this year, the average price did go up. So in April, it reached $1,046,000, and then it came back down a little bit in May to $1,024,000, and then it shot back up in June to $1.117. So this is the average sales price. So you have to take into account there's a lot of different price points in Seattle, but the average price point is continuing to grow. So even though sellers might be in a tough spot in terms of what they can sell their home for, it is good news for a seller that the average sales price continues to grow for them. Talking a little bit about the number of new listings, again, seasonality impacts this. So when we started the year, it was a little bit lower than it would normally be, but 993 new listings came on the market in January. That stayed steady for February. And then in March, we started to see this skyrocket to the peak, which was May this year. We saw 1,867 new listings in May. Now that's more than we've seen in any given month over the past 3 years. So in June 2022, that was the last time we saw 1,737 new listings come onto the market. Now that has come down a little bit in June this year to a little over 1,500. So the number of new listings is climbing, and this is primarily what has caused sellers to have a lot of competition. It's also giving buyers a lot of options to look at. So this is something for buyers for you to consider because you do have options out there that you can choose from. For sellers, you have a lot more competition in this market. Looking at the number of homes going under contract or pending sales, now this continued to grow at a pretty steady rate, and we do see that in June, this surpassed where we've seen it in most of the past 2 years. So in May 2023, we saw 858 go under contract. That was the peak. In April 2024, we saw 900 go under contract. And to give you context, just in June, we saw 934 go under contract. Now, this is down from back in 2022 when we were seeing over 1,100 go into contract, but you will see we're still growing at a pretty steady and healthy rate. I don't think this means the market's crashing because we still see the number of homes going under contract keeping up with where it was the past 2 years. We just see an increase in the number of homes listed for sale. Now let's talk about the average days on market. So this is the average number of days that a home is listed for sale. The peak goes up in January because of seasonality. We see homes sit on the market a bit longer. So this is exactly what we want to see, is that this number drops all the way through May and June to about 22 to 23 days on market. This is pretty standard. In 2024, the lowest we saw was 18 days. In 2023, we saw 19 days. And then 2022 is our anomaly here where it was 9 days. Much hotter market in 2022. And so we are still on track for the past 2 years. There's nothing really abnormal about the first half of this year when you're looking at average days on market as you compare it to the previous 2 years. Now let's talk about how homes are selling as compared to their original listed price. So this is a percentage of the original listed price. In 2025, we've seen that homes are still selling on average over the listed price. So in February, March, and April, we saw that homes were selling for about 1% over the listed price. That has come down in May to right at list price on average. And then in June, we saw that go down to 99.9% of the listed price. Now, again, this is pretty typical for this time of year. We see the same trend in 2024 as well as 2023. 2022 is when we saw homes going almost 10% over the list price. So this is pretty normal, and it shows that the market is relatively healthy. Homes are selling on average for the price that they're listed at. So what do we take away from that data? Basically, in my opinion, when you're comparing 2025, the first half, to 2024 and 2023, we have a very similar market with the addition, we have a few more homes listed for sale than we did the past 2 years for the same time of year or the same season. I don't think that you can conclude that the market is crashing from this. It's still a healthy market. In fact, it might even be healthier because buyers have some opportunity here to actually get into a home for the list price or even slightly lower. And especially if we were to dissect this data by condos and townhomes, those are where buyers can actually get a really great deal on some of these. So how do we think about going into the second half of 2025? Well, here's what I think. I think that interest rate could potentially continue to go down. I'm hopeful that by the end of the year, we'll see the interest rate somewhere around 6.5%. This is relatively okay in my opinion. You know, it's keeping the market a little bit healthy. It's causing some more negotiations, I think, especially in our area. What we're seeing is that buyers can come in and negotiate for a credit from the seller to buy down their interest rate, to get it down to that 5.75 that they want, or that 6% that they want. So I don't think that interest rate needs to go down a ton more, but of course it will help spur some of the buyers that are waiting on the sidelines if that interest rate does go down. So I think that that could happen. Now I think for the rest of 2025, what we will see is probably a lot of this inventory is going to be taken off the market or go under contract because buyers are going to see that they can take advantage of this time in the market. There are still buyers out. The homes that we have listed for sale, they're still getting showings 3, 4, 5 per week. So buyers are still out in the market, and I think this will continue. We will most likely have a little quiet period in August. This is a great time for buyers to get a great deal because maybe those are homes that have been sitting on the market for a little bit longer over the summer and they can swoop in and get those. I think come September, especially if we see that interest rate come down, we will see an uptick again in the number of new listings as we typically do from our seasonality data. We show that homes are listed again right after Labor Day, and we'll probably see some new buyers come into the market then as well. And that will give us another spur in how many homes are being sold. So I do think the real estate market overall will continue to be healthy through the end of 2025. Now, if there is more geopolitical tension or any more announcements that will really impact the economy, what I've seen is that those announcements typically impact buyers for anywhere from like 3 to 6 weeks before they feel confident again, or before things might be able to settle down and they feel comfortable going out and making that purchase again. So I'm curious, what are your predictions for the remainder of 2025? What do you think is going to happen in the Seattle real estate market? I'd love to know in the comments below. If you have any questions about the data or what's going on in the market, or you want to start talking about your strategy for purchasing or selling a home in the Seattle area, we'd love to book time with you. Feel free to text or give us an email and we'll set up a free consultation where we can walk you through a strategy that will meet your needs. Thanks for tuning in. We'll see you again next time.